Good morning, everybody, and again, apologies for the delay here in the technical setup. Thank you for the kind introduction, and I really do appreciate the invite to speak with you folks. I have a fairly lengthy slide deck here that I'm going to go through fairly quickly. I'm happy to share the deck with you folks as well in a PDF format when it's over. And I'm not sure if we're taking Q&A, but I'm happy to, at the end, take questions. If for some reason we run out of time, my full contact information is on the lower left-hand part of this slide, and it's actually on every slide going forward. So second half of 2024, it's kind of interesting. I heard a fairly prominent economist speak the other day, and he said, if you think about it, we are a quarter of the way through this century and halfway through the decade. And I had to stop and think about that a second. It's pretty remarkable how time does fly. Um, Disclaimer, my attorney makes me put this into every presentation. It basically says don't make any decisions whatsoever based upon what I say, particularly investment decisions, and candidly, don't believe anything I have to say. So I gave you the disclaimer. Let's deal with sort of the elephant in the room, and this is not going to be a political conversation at all. But the fact is that the U.S. presidency has been decided. We're on the verge of changing hands for the third time in 8 years, which is a significant period of instability in Washington that hasn't been seen for decades now. There's advantages and disadvantages to everything. The potential of a unified government could very well mean that the Republican Party is going to be ushering in some transformative period. They're very growth oriented, lower regulation, pro-business. Again, this is not a political conversation, but this is what they have announced that they stand for. And commercial real estate. So we're going to start at a high level and then get down to hospitality. But commercial real estate is clearly going to be presented with opportunities and challenges. That would be the case no matter who was in control in Washington. Expansion-focused policies can increase the value of real estate assets, particularly as the cost of goods and the cost of labor goes up. Existing asset values should grow. Um, on the flip side, growth policies can definitely generate inflationary effects, which we've all experienced in the recent past, and that's a challenge in and of itself. But there's no doubt about the fact that commercial real estate is on the brink of some unprecedented investment opportunities, and that the road ahead is going to be volatile, but there's opportunity to generate alpha that we haven't seen in quite some time. So just segueing over to the economy, first of all, the global economy, and this is generally, obviously, it's not every single country in the world, but generally the global economy is expanding. It's choppy, but it's expanding, which is good for the lodging industry. When we drill down to the U.S. economy, it's really remarkable how long we were hearing that the U.S. was on the verge of recession, right? And it never happened. Just looking at some of these headlines, the economy has been incredibly resilient, irrespective of all the noise going on in the world. Stocks are now at an all-time high. Interest rates have now been cut for a second time. And growth is happening. It may be toned down a bit compared to what's happened in the recent past, but the fact is it's growth nonetheless. Um, when we look at the data in a graphical format, we can see that GDP is growing at a very healthy clip of 3%, and it's anticipated to continue. And then it's very interesting that, the Federal Reserve was able to achieve something that, really is extremely rare in history in terms of being able to deal with interest rates without, I should say, cooling inflation dealing with interest rates without causing a recession and joblessness. So kudos to the Fed for doing that. When we drill down a little bit further, the good news is that households that have the means to travel are anticipated to continue to increase. Unemployment for professionals continues to remain low. That's all the good news. The bad news, and we're going to dig into this later, is that U.S. personal savings, during COVID ballooned because people were staying home and they were banking money. And now that COVID is way behind us, we're sort of below where we were pre-COVID in terms of personal savings rates. And lower income folks are feeling pressure, and it's affecting their ability to travel. Again, we're going to talk about this a little bit later. Talking for a moment about U.S. commercial real estate, it's really remarkable, not just hospitality, but commercial real estate in general. If you think about it, it was only, what, 4.5 years ago, 5 years ago, that we were in the depths of an unprecedented event with COVID that happens apparently every 100 years. And, commercial real estate just really got hit horribly, particularly the office sector, which has been struggling to come back. There clearly is a bifurcation between Class A and anything below that. Class A office space is doing well, but everything below that is not doing well. But the fact is that commercial real estate has taken it on the chin, and some pretty smart folks, including Blackstone, see that a bottom has come into place, and that generally speaking, we should see a rebound in commercial real estate going forward. The travel industry, incredibly strong. Again, when you think back 4 or 5 years ago, during the depths of COVID, travel came to a screeching halt, and it's come back voraciously. One of these headlines that I find interesting is KKR acquiring the parking spot, which, if you're familiar with the parking spot, it's off airport parking facilities throughout the country, and they're betting that U.S. travel is going to continue to grow. So aside from looking at the statistics vis-a-vis air traffic, which we will look at, and hotel metrics, I find it interesting that a private equity firm is betting on parking lots surrounding airports and people continuing to travel. When we look at global airline sector and global hotel revenues, they have come back, dramatically from. I mean, the graphs are very clear. What happened during 2020, they fell off a cliff, and then the rebound since then, and that rebound is anticipated to continue, which is a great thing for the lodging industry. When we drill down to the lodging sector in the United States, we can see it's sort of good news, bad news again. Revenue per available room is growing. There's no question about that. But when you look at it on a real basis, right, adjusting for inflation, we're still below 2019. So again, good and bad. All the chain scales are rebounding. The lower end, which we're going to talk about a little bit further, has definitely taken it on the chin again because of personal savings rates being challenged, particularly by lower income folks. But that is anticipated to reverse next year. There's a bifurcation between economy and mid-scale versus luxury and upper upscale. And I think what this sort of alludes to is that, the rich continue to get richer, and the middle class and below are challenged. GOP margins, listen, revenues are increasing modestly, but there's definitely a challenge vis-a-vis expenses in many cases, increasing greater than revenues, which puts pressure on GOP margins, gross operating profit. But there are significant profits nonetheless. As we continue to look at some of the major headlines in the sector, resilience is a big term, right? $1,000 a night hotel rooms are not unheard of, and the wealthy are more than willing to pay for it. $200 a night hotel rooms feeling like a bargain. I mean, if you just look at these headlines, it's pretty amazing the comeback that the hotel community has experienced, and more is anticipated in the near term. And then we would look at the public companies and investor earning reports. These are all headlines within the past 2 weeks. We can see that generally the publicly traded hotel companies, listen, some of them are struggling because of strikes, labor strikes, as well as weather events. But generally speaking, it's really looking good. Earnings are somewhat growth in earnings are being challenged again because of what I just described. However, the outlook is fairly bullish. We're going to talk about strengths, weaknesses, opportunities, and threats within the sector. I'm an optimist at heart, so I'm going to be doing strengths, weaknesses, threats, and then opportunities, so we end on a high note. Getting into the strengths, Americans are shopping a lot less and going for experiences, right? We've all heard about this, right? And COVID had a lot to do with that, creating an experiential economy. And that's a great thing for travel and for the lodging industry. And generally speaking, consumer, and we're going to get into this further, consumer confidence, is still fairly strong. And listen, Americans go on vacation whether they can afford it or not. I think it's sort of a God-given right that we're allowed to do that. So that's a great thing for the travel and the lodging industry. When we look at the various segments within the lodging industry, whether it's business, group meeting, leisure, they're all firing on a positive basis. Now, leisure has come down a little bit. We all recall revenge travel, right? During COVID and right after COVID, there was tremendous amounts of leisure travel, and business and corporate group were slower to rebound. We're now at the point where corporate individual travel and group business travel are rebounding robustly. And leisure has trailed off a bit because people are now back to work. So that's a good thing, right? Because if you think about it, corporate business travelers end up paying more in average daily rate than leisure business. So this is all good. Group business took a while to get back, but it's back with a vengeance. I was at the hospitality show in Houston about 2 weeks ago. It was produced by Questex and the AHLA. There were 4,800 people there. So quite remarkable how things have turned around. When we look at U.S. Travel volume, the airlines, record numbers of travelers are flying. Again, this is a great thing for the lodging industry. New supply is fairly muted. There have been headlines about record amounts of new development, but one needs to be very careful when considering that, because some of that data includes, when you look at the slide on the lower left-hand side, right, properties that are in under contract, which is another term for pre-planning. Pre-planning and planning are very different than in construction, right? Something that's in construction is ultimately going to happen. Under contract and planning could very well be a dream in somebody's head to build a hotel. That doesn't necessarily mean it's going to happen. And candidly, what occurs is that those developments that go from under contract to in construction, as that occurs, it diminishes the economic feasibility of those that are in the lower segments of planning and under contract. So again, new supply is fairly muted. That's good news. Permanent hotel closures are there was a rash of that occurring during and after COVID. It's still happening. It's returned to a more normal level, but it is clearly happening. And what I find interesting is that within the lodging sector, everybody talks about new supply, but they fail to talk about net new supply, which is interesting because when you look at other commercial real estate asset classes, office, retail, what have you, everybody else talks about net new supply. For some reason in the lodging industry, we don't. So it's something that is important to be focusing on. Financing, there is a enormous amount of financing available for refinancing assets, for acquisition, for a bit for construction. This is just a smattering of deals that have occurred in terms of refinancing just in the second half of this year. If we had the first half of this year up on the screen, we'd have 5 slides with all sorts of transactions that occurred. And we can see there's some major, significant refinancings that have gone on for a whole slew of assets, including portfolios. So lots and lots of refinancing proceeds are available. Acquisition proceeds, again, no shortage of money to acquire hotels for deals that make sense. And there's even a bit of construction money. Now, construction money is not as available as it was pre-COVID. And candidly, that's because of economic feasibility. Generally speaking, this is not everywhere, but and the hotel business always has been and always will be a sub-market street corner business. So we all talk about national averages and we talk about top 25 markets, right? But you cannot really talk about New York in a vacuum without recognizing that there are so many sub-markets within New York, right? And so construction financing is available for projects that economically make sense. But generally speaking, you can still buy for quite a bit less than you can build. So that diminishes the notion of economic feasibility and diminishes the notion of available construction financing that for projects that just don't make sense. There's been a rash of mergers, acquisition agreements, license agreements between hotel management and brand companies. I mean, just this past week, if you look at the bottom part of the slide, we've seen a whole slew of announcements from Pyramid Global merging with Axiom. Davidson was just sold. Peachtree Group just partnered with Group 10. Griffin Hotel Management just merged with Meyer Jabara. I mean, it's really incredible the consolidation that's been going on within the management space and the brand space. And listen, a lot of that has to do with a lot of companies are under pressure to grow, right? And the best way to grow is to acquire. Another thing too is that labor is good labor is hard to find, and so when you acquire, you're acquiring not just hard assets, but you're also acquiring labor, and so that's why we've seen a lot of this go on in the recent past, and more of it's anticipated to continue. The transaction market definitely was slowed during the recent past because of high interest rates, no question about that. But now that interest rates are coming down, we're seeing activity advance. We're also seeing the bid-ask spread between buyers and sellers narrow, and we're also seeing capitulation, where investment groups that were under pressure to sell and were holding off for a better day are now acquiescing because debt is coming due, product improvement plans or PIPs are now being forced to occur. And, many folks are just throwing up their arms and saying, you know what, I want to get this behind me once and for all, and putting assets on the market. And again, allowing bid-ask spreads to narrow. When we look at some of the single asset trades that have occurred in the United States, just this year, the first 3 quarters of this year, there have been some significant, large trophy-type transactions that have occurred. From the Hyatt Regency in Orlando at just over $1 billion to the sale of the One Hotel in Nashville and the Embassy Suites Hotel in Nashville, which Host Hotels bought from Starwood Capital for $530 million. It continues when you get below a half $1 billion. The Thompson Central Park traded for $308 million. All the way down to the Hyatt Regency that Sunstone bought for $230 million. So some significant asset trades in hotels at some fairly robust numbers. When we look at between over $100 million, less than $200 million, again, no shortage of trades. And then when we look at per room asset trades, the islands of Almirada in the Keys sold for $2.4 million per room. The one Central Park hotel sold for over $1 million a room. The Arizona Biltmore over $1 million a room. You know, the notion of $1 million a room sale price, it used to be unheard of. And when it happened, it was like big news. Today it's news, but not nearly as big as it used to be because it's occurring more often. And then we can see at the bottom part of the slide, you know, some healthy trades. The William Vale for just shy of $1 million a key. And then again, the one hotel in Nashville and the Embassy Suites in Nashville at $735,000 a room. Those are big numbers and speaks volumes about the investor perception of the lodging industry. And then when we look at the profile of buyers, you know, the folks who are investing money in the lodging sector today, I mean, it's remarkable. Many of these are hotel-centric investors that this is what they do, 100%, whether it's Chartress Lodging Group, Chatham Lodging Group, Clearwood, Noble, Peachtree. This is what Rockbridge, this is what they do full time. They don't just dabble in the lodging space. They know and understand the lodging sector better than those who just dabble in it. And then, of course, you have you know, the private equity funds led by Blackstone, who, you know, continue to invest in the space. They always have. You know, when you look back at Blackstone acquiring Hilton back in, what was it, 2006, Blackstone is always buying and selling. They don't necessarily try to time the market in general. They time deals. And they're bullish on the lodging sector. So, you know, all really good news. You know, hotel companies, whether it's Pestana, you know, again, they're making big bets on the lodging industry, which is great. Another strength for the sector, the American Hotel and Lodging Association, which definitely, in my humble opinion, deserves a shout out. They do a terrific job representing us in Washington, D.C. And, you know, I think we should all be grateful and applaud what they do. And so a shout out for what they do for the sector. Moving on to weaknesses, you know, travel is expensive. We saw, you know, $200 a night room rate now being perceived as a bargain, right? $1,000 a night room rates not being unheard of, right? The economic realities of what I described earlier, that you know, the middle to lower income is getting squeezed. It's affecting, you know, it's having negative impact on lower tier hotels, and we're seeing that in the data. And unfortunately, you know, credit card delinquencies are moving up, and credit card balances are, you know, are still fairly high. And so that's definitely a challenge that we're going to be dealing with in the near term. Americans are traveling overseas in tremendous numbers, which is great on the one hand. On the other hand, if they're traveling overseas, then they're cutting down on their domestic travel, right? Add on top of that international travel has not really rebounded to pre-COVID levels. It's rising. There's no question about that, but it has not gotten back to pre-COVID level. And a lot of that has to do with the Chinese have not come back. I'd like to think that they will be coming back in droves, but it's been taking a while, and probably will continue to take a while. Clearly a weakness. You know, this continues to be a hot topic, the return to office. You know, Castle systems, they're not perfect, but the industry does tend to track occupancy of workers in office seats. And it's been hovering around 50% for quite some time now. That doesn't mean that people aren't working. People are working, but it's a hybrid model, or they're working remotely, right? And, you know, again, good and bad. When people are working remotely, that does put negative pressure on individual business travelers going out and seeing their customers. That's the bad news. The good news is that when people are working remotely, the need for companies to have group meetings, internal group meetings, rises because people need to get together, and there's nothing like face-to-face. And so hence the robust rebound in group meeting business. The fact is that we are not back to pre-COVID levels of people working in the office. Again, that doesn't mean they're not working. And I candidly believe that we're never going to get back to pre-COVID levels. So again, that places some negative pressure on the sector. We talked a minute ago about Americans being squeezed financially, credit card delinquencies. On the one hand, right? When you look at the lower right-hand corner, consumer confidence is up, right? That's generally speaking. So you need to segment between, the upper end and the lower end. Interesting headline here on the lower left, one up from the bottom, Home Depot, warning of a pullback in consumer spending. Interesting commentary. Staffing shortages have been a huge issue, not just for the lodging industry, for many industries, but the lodging industry is definitely feeling it. It's gotten a little bit better since we came out of COVID, but it's still a big challenge for the sector. It places upward pressure on wages. Again, good news, bad news. The good news is that technology, and we're going to get into this a little bit later, technology is a solve for a lot of this challenge. Expenses that are increasing rapidly include property taxes, insurance. Insurance is just off the charts because of weather events that have been occurring. We've had clients who, particularly in Florida, they're unable to actually renew their property insurance. They're not able to get property insurance. And technically, even if they want to self-insure, if they have debt on their properties, they're one of the covenants in their loan documents is being violated without property insurance. And so that's a real challenge for the sector. Rates are not coming down. Did I talk about property? I didn't talk about property taxes yet. Capital expenses. During COVID, many hotels were delayed renovation programs, and the brands were pretty lenient on allowing sponsors to sort of kick the can down the road. But that's done and over with. At this point, the brands are now insisting that PIP, product improvement programs, occur. And the rubber is meeting the road, and many sponsors are just not able to deal with it, and that's going to catalyze transaction activity, whether it's recapitalizations, where fresh money comes into deals, or outright sales of deals. And then, of course, there's the fact that capital spending on a per available room basis is only going up. It's not going down. So something to definitely consider as being a weakness for the sector. New brands, it's kind of amazing that we still have new brands coming into the sector. It's kind of the amount of new brands coming in has been reduced somewhat in the recent past, but the fact is that we have outsiders coming in now, whether it's retailers or Chef Jose Andreas getting into the hotel space. It's a challenge for the sector that we have all these brands, because candidly, I don't believe that the traveling public. I mean, look at the top headline on the right-hand side: confused by all the Hiltons and Marriotts, us too. That speaks volumes, right? I've actually heard, I'm not going to name names, but franchise sales folks with major brand families acknowledge that they could not articulate the difference between brand X and brand Y within their brand families. So if they can't articulate the difference, how can the traveling public? It's confusing, and it's clearly a challenge for the sector. Moving on to threats. This is all fairly self-explanatory. Geopolitical risks around the world are a big challenge. I don't need to get too much into this, but some of these headlines are a little bit mind-boggling. When you look at the lower right-hand corner, U.S. Space Force warns of mind-boggling buildup of Chinese capabilities. U.S. Space Force. When I saw this headline, I wasn't even familiar with what the U.S. Space Force is, but it's part of the U.S. government. I believe it's in the Department of Defense that deals with potential challenges that may end up in space. So that's all on the right-hand side. On the left-hand side, listen, the election is over, but polarization is still there. It's not a good thing for the United States, but it's there, right? We are the divided states of America, and hopefully this polarization is going to settle down. You look at this headline that just came out the other day about Americans prepping for a second civil war. Unfortunately, I don't have a source on that there, but it came from the New Yorker magazine. Another interesting headline, again, when I came across this on the left-hand side in the middle, America's drinking water is facing attack with links back to China, Russia, and Iran. I mean, this is all conspiracy theorist stuff. I'm not a conspiracy theorist, but this is in the public domain. I mean, CNBC, right? Or look at the lower left-hand headline. Electronic warfare spooks airlines, pilots, and air safety officials. Hundreds of daily flights around the world are running into GPS spoofing, a hazard that poses new risks for pilots and passengers. Again, I wasn't aware of this, and it's pretty scary stuff when you think about it. And God forbid something would happen, right? What does that do to travel, right? We know what it does to travel, right? We know what happened after 9/11. We know what happened after COVID, right? Travel is a daily phenomenon and can fall off the cliff in one day, right? If you think about hotels, it's a little bit of a beauty and a curse in terms of being able to change pricing by the nanosecond, right? Hotels lease guest rooms every single day, right? And in a rising market, with technology being what it is, you can increase rates by the nanosecond, right? In a declining market, it works the other way and can really bite you hard and quickly. So, all these geopolitical events are fraught with danger because, it could have a dramatic negative effect. We've seen it in the past, and hopefully we will not see it again in the future. Unionization, listen, there's nothing wrong with unionization, but the fact is that the hotel industry was targeted a long time ago. Unions have come back and generally within labor throughout the United States, not just the lodging industry, but like I said a minute ago, lodging was targeted early on, and they've been very successful at getting into the sector. And listen, all things being equal, a hotel with union labor compared with a hotel that does not have union labor, the one without union labor tends to be more profitable than the one with union labor. And most of that has to do with not necessarily wage rates, but rather work rules. But again, the fact remains that unions are gaining strength as more time is going on within the lodging sector. We've seen a rash of strikes during this past summer. That's not good for the lodging industry. Other threats are risks of default with existing debts that are coming due. Again, there's tons of money available to refinance, but if you think about it, there's a wall of maturities that are coming up, not just in the office sector, but in the lodging sector. And a lot of these loans were originated at interest rates that are much, much lower, or were much, much lower than they are today. Right. So between the debt coming due and having to refinance in a much higher rate environment and having the added pressure of doing renovation is really causing negative pressure on many existing transactions. And we're seeing, and we will see many deals get stressed. We're going to talk more about some of the opportunities associated with that. U.S. government regulations and intervention within all sorts of industries, but we're talking about the lodging industry. The government, and not just the U.S. government, but local governments as well. There's all sorts all sorts of things that are happening that are placing negative pressure on the lodging industry, whether it's accusations of price fixing or price collusion. The upper left-hand headline is quite interesting. Co-star luxury hotels hit with U.S. consumer price fixing lawsuit. If you're not familiar with this, you might want to look into it. Many of you know that CoStar, which is STR, provides the sector with terrific data for composite set occupancy and rate and RevPAR information, right? So if you identify within a competitive set 4 or 5 hotels, you're able to get an aggregate report that tells you what's going on a monthly basis in terms of occupancy and rate. If CoStar STR was precluded from being able to make that information available to the space, think about it. We'd go back to the dark ages of counting cars in parking lots and lights on in hotel guest rooms. Hopefully, that's not going to happen. The granddaddy of them all in terms of government intervention into the lodging sector. If you're not familiar with New York City having recently passed what's called the Safe Hotels Act, it really has nothing to do with safety, although that's the spin on it. It really has to do with, again, union labor and making sure that that hotels use union labor as opposed to outsourcing to non-union labor. At the end of the day, hotels in New York, this is New York City, 100 rooms or more that are not currently unionized will have to be unionized in short order here. So again, all things being equal, a hotel union labor versus non-union labor is more profitable. These threats, they've been with us. They continue to be with us. COVID, thank God, is behind us for the most part. But that doesn't mean that we can't see, some other event rear its ugly head again. Climate change is a huge issue. Cyber warfare, big issue. Last year, we saw, a rash of individual hotels and hotel companies getting attacked. If you think about it, the lodging sector is so ripe for attack by cyber criminals because of all the data that's harvested by guests, who stay at hotels. So definitely a big challenge for the sector. Moving on to opportunities. The hotel industry is always looking for an edge, right? Resort selling day passes for people to come in and use the facilities, but not necessarily stay in the hotel, right? Motels, exterior corridor, 2-story motels are having a comeback in terms of renovating them and making them hip and cool. Hyatt Regency adding personal training, sleep tourism. I mean, that's kind of mind-boggling. Sleep tourism, right? People going to stay at hotels to get a good night's sleep, but it's happening. Other opportunities, bunk beds in luxury hotels, parking, right? If you think about it, parking is real estate, right? I'm always amazed at hotels that provide quote unquote free parking. There's probably lots of opportunity to charge for parking, and we're seeing many hotels and hotel companies taking advantage of it. Hilton is working on hospitality in space, right? We see space visitation. It's happening as we speak between Elon Musk and Jeff Bezos and what have you, right? We're all going to be available to go into space in the not too distant future, and hospitality will be ending up in space as well. So, quite interesting that a whole new world, if you will be opening up to the lodging sector. Partnerships, rash of partnerships going on within the sector. Kenneth Cole now providing amenities into Wyndham Hotels, My Place Hotels of America forming a partnership with Grubhub, Sage Hospitality getting into managing apartment hotels. I mean, again, every platform is looking for an edge, and typically first to market wins. So glamping is becoming a big opportunity for the lodging sector, and we're seeing the brands get into that. Hilton has an affiliation now with AutoCamp. More opportunities. I talked about the delinquency rates that are occurring, not so much in the larger markets, but money is out there. There's no question about it, particularly in larger markets that are perceived as good bets. $85 billion of hotel loans expected to mature in 2026. I'm fond of saying that we're going to see a lot of distressed induced transactions that will not necessarily reflect distressed pricing. Why? Because there's so much equity money out there on the sidelines available, looking for yield and chasing opportunities, that when distressed induced opportunities become available, there's so much money out there that the favorable stories are gonna be bid up, and you're going to end up with, like I said a moment ago, distressed opportunities that will not necessarily reflect distressed pricing. Here's a smattering of foreclosures and assets that have fallen into default or on watch lists, or that already been taken back and listed for sale. We've seen quite a bit of this go on in the recent past, and we're going to see more and more as this wall of maturities comes during the next couple of years. That's, again, a good news, bad news, right? Bad news for existing sponsors, good news for all that money on the sidelines looking for a home. And all the money on the sidelines, when we just look at some of the players out there that have raised funds, from Noble Investment Group to a Blackstone alum, Driftwood Capital, Starwood Capital, Sunstone. I mean, major players, Host Hotels and Resorts. This is smart money that knows and understands the sector. They're looking to invest in the business, and that speaks volumes. San Francisco is a bit of a hot topic. I'm very bullish on San Francisco on a long-term basis. And when I say long-term, I'm talking about patient money that, if need be, has to be willing to hold on to at least for 10 years, right? San Francisco, in my mind, is a beautiful city. It's a world-class city. It's a gateway to Asia. And unless somebody believes that it's literally going to fall into the Pacific Ocean, I don't see how it's not going to come back. It has a history of dramatic highs and dramatic lows, and it's taken it on the chin. There's no doubt about it. COVID was a deal breaker for San Francisco. But if you think back 5-6 years ago, San Francisco was a darling hotel market. High barriers to entry, strong average room rates. It's going to come back. I don't know how it can't. And the technology sector is still there. AI is growing, and it's pretty much based in San Francisco. So, in my humble opinion, that's where smart money is going. And we've already seen EOS Hospitality, smart equity money, buy the Hotel Zoe for over $300,000 a key in San Francisco, all cash. Technology, I mentioned this earlier, tremendous opportunity to deal with the labor challenges. There's no doubt that the hotel industry is now finally embracing technology. The sector has always been a little bit behind in terms of not only creating technology, but also embracing existing technology. And I think COVID changed all that. And the hotel industry is now very forward-thinking in terms of creating their own technology and embracing technology. which is a beautiful thing, and it should have happened a long time ago, but thank goodness it's finally happening now. Other opportunities, the short-term rental space is having a rough time, led by Airbnb. New York City pretty much cracked down on it. Barcelona, another country, but Barcelona is outlawing short-term rentals. I believe it's in 2026 or 27. We're seeing this happen in many markets around the country and the world, and that's a good thing for the lodging industry, right? Because when these platforms came into fore, they were unregulated, and they were impeding in the hotel world, and there was a lot of fear that they were going to sort of be permanently a negative impact on the lodging sector. Well, what turned out is that lots of folks, including myself, tried short-term rentals, both for leisure travel and for corporate business travel. And while I personally found some fairly nice places, I also found some fairly awful places where the pictures were not indicative of what I walked into. And so that fear of unknown, when you put your key in a Airbnb and turn the key to go in, what am I going to get here, right? You don't typically get that with a branded hotel. So opportunities for the lodging sector to continue to lobby municipalities to crack down on short-term rentals is an opportunity for the space. Hotelification of office space, right? When you think about Class A office buildings, if anybody's familiar with One Vanderbilt in Manhattan, that is a brand new, beautiful office building that is imbibed with hotel services. When you walk in there, you feel like you're getting a hotel experience, from entertainment to food and beverage to retail, and we're seeing hotel companies, hotel management companies, recognizing that there's an ability to expand their offerings to start getting into managing office space, right? If you think about it, who's better to manage an office space? Somebody that leases it, or somebody that really knows and understands the lodging space? So I think that's a tremendous opportunity, and we're going to see more and more of it as time goes on. If you're not aware of 3D printing, it's a very interesting phenomenon, and it's a real interesting phenomenon vis-a-vis construction and development of all sorts of new assets, including hotels. And the first 3D printed hotel is being constructed as we speak in a place called Marfa, Texas, El Cosmico. It's a very interesting development. I encourage you to check it out. Remarkable in terms of the speed that this can get built and the cost savings. And it ends up being a beautiful product as well. So something to be on the lookout for. The Dallas hotel market, for some reason, is on fire. So here's a big opportunity if you're looking to invest in the lodging space. And just to wrap all this up, the lodging fundamentals in America are fairly healthy. Generally speaking, revenue per available room is rising, but growth has definitely been stagnating. But it's growth nonetheless. Room night supply is outpacing, room night demand is outpacing supply. I mentioned earlier about Americans traveling abroad. Corporate and group meeting business is strengthening, while leisure has declined a bit. And then the bifurcation that we talked about. ADR, average daily rate, it continues to be the driver in the lodging space. Occupancy has pretty much tapped out at high 63, about 64%. Not too much more room for growth in occupancy. It's the growth in revenue for rooms is going to occur in average daily rate. And then we talked about operational costs definitely being a challenge, many cases rising faster than inflation. We talked about permanent hotel closures. We talked about transaction volume slowing, but how it's going to be catalyzed in the next 12 months due to lowering of interest rates, bid-ask spreads continuing to narrow, private equity firm fund life expectations, where the funds are coming, the end of life for these funds is coming due, and they have to dispose of assets. There may be nothing wrong with the assets, but the fund needs to wind down. So we're going to see more and more of this happening. And financing is abundantly available. We spoke about that. The last thing I would say on this topic is that investment dollars are clearly prioritizing acquisition over construction. And again, that goes back to the notion of if you can buy cheaper than you can build, why would you build? Hotels are a preferred commercial real estate asset class. It's really interesting that I've been doing what I do for over 40 years, and I don't recall ever there a period of time where hotels were considered a food group of commercial real estate, an accepted food group of commercial real estate, never mind perceived as more advantageous than office buildings. Office buildings today are really in terrible shape. And it's an amazing phenomenon, right? Because theoretically, office buildings have long-term credit-worthy tenancies, right? Then once you lease them up, you know what your revenue is going to be, right? And then you can figure out what your expenses are going to be, and it ends up being an annuity, as opposed to hotels that we talked about, dramatic highs, dramatic lows, constant repricing. And yet today, hotels are perceived as a more desirable asset class than office. So quite interesting. Lots of first timers coming into the hotel space. I tell you what, in the advisory world, we love these folks because they're smart, sophisticated, they have money, they know and understand real estate, finance, markets, but they don't necessarily understand the hotel space. And folks like me definitely enjoy working with first-time hotel buyers, and candidly, so do the hotel companies. They need help. Okay. There are definitely, we spoke about this, the long-term outlook for the sector is very positive, but there's lots of uncertainty out there, right? Between geopolitics, interest rates, the economy. There are challenges out there, but I'd like to think that we've come this far. We're going to continue to expand and grow, and life is good, and the lodging sector is going to continue to do well. An enormous amount of debt coming due that's anticipated to mature over the next 5 years, $150 billion of hotel debt that's coming due. The good news is that there's billions of dollars out there looking for a home, looking for yield, and hotels are perceived as a tremendous protection against hedge against inflation, again, because of the ability to dramatically raise room rates very quickly. I talked about the last bullet point, distressed deals that are going to occur, but not necessarily going to reflect distressed pricing. And this, I believe, is my last slide. This is a quote from Chris Nassetta, who leads Hilton worldwide, and it's a great quote. Over the long term, it's going to be spectacular. All the trends that were here pre-COVID are here even to a greater level. People's desire to spend on experiences and do things. The other thing that is long-term very beneficial is the golden age of travel is mobility, greater flexibility, and the hybrid work environment where people are going, to have more flexibility on Mondays and Fridays and weekends. They'll be able to engage in bleisure travel, right? It's not my term. I don't like it, but it's a phenomenon, bleisure. The more mobile the world is, the better for the travel and the hospitality business. As Chris said, it's that simple. So with that, I thank you very much, and I hope I didn't go over my time, and I really appreciate the opportunity to visit with you.
Wonderful. Thanks a lot, Dan. That was very interesting and a lot of information. I will absolutely be watch that to digest more. But thank you so much. And we still have some time for Q&As. So members, please feel free to ask questions. Amit?
Thank you, Sophie. Dan, thank you as always. This is incredible. I wanted to ask I wanted to ask you about labor. You mentioned some interesting things, the unionization, the persistent sort of lack of labor or availability, wages. There's an upward pressure. A couple of states have approved minimum wages, others have not, but it's not going away. And then you also said something very interesting. I completely agree with you in terms of sort of the creation of our own space for technology. Do you think all this is going to come together in terms of automation? And I mean, I don't want to say the word, the AI part, but really it is about sort of the lower hanging fruit is going to be automation. Any thoughts on that?
I think it has to happen. I don't think there's any doubt that it will happen. We're seeing it already and in other sectors and other industries, and we're starting to see it in the lodging industry. And if you think about it, those who watch others do it but don't do it themselves, they're going to fall by the wayside. How it occurs and the timing of when it occurs is up for debate. But I think the most important notion, again, I'm going to harken back to the hotel industry, unfortunately, in the past has always been very sort of reactive as opposed to proactive, right? I'll give you an example outside of technology. Think about the online travel agencies, which actually is technology when you think about it. Online travel agencies came into the fore during the Great Recession of 2008. Yes, 2008. And the hotel industry during the Great Recession was in the doldrums, right? People weren't traveling. The economy was tough. And so the online travel agencies came around then, and the hotel sector was like, oh my gosh, this is the greatest thing since sliced bread, and embraced it tremendously. Only to realize, like, wait a second, we're losing control over our most precious commodity, the guest, right? And if you recall also, the hotel sector made an attempt at creating their own online travel agency. I'm trying to remember the name of what it was. But Marriott, Hilton, Hyatt, all the big boys got together and attempted to create their own online OTA, online travel agency, and it failed miserably. And since then, the sector has been in a tug of war with the online travel agency to wrest control back of, again, their most precious commodity and booking direct campaigns or brand.com, if you will. I mean, we all know that struggle that's gone on. And I think the hotel industry has done a great job at clawing back. But online travel agencies are still with us, right? But that's just a good example, in my humble opinion, of the hotel business being reactive originally as opposed to being proactive. So on the technology part, I think it's important for the hotel industry to be proactive in creating technology that they then own and use, and perhaps provide others for a fee to use, right? But not have to rely on an intermediary. That was a long-winded answer to your question, but I hope I answered it.
You did. Thank you, Dan.
Okay, and then I jotted down like a couple of questions during your presentation, but then I was also actually I couldn't sometimes focus on the presentation, so I might have missed some part. One thing was you talk a lot about unionization as well, and like in New York City, like imposing new restriction on that, new law on that, like more than 100 rooms or something. Do you see any potential changes, like because the now the Trump is elected because of that?
Well, that's an interesting question. Listen, the Republicans have control of the federal government. They don't necessarily have control over local governments, right? Um, the Republicans are generally speaking, less pro regulation than the Democrats are. So I would say you're probably going to see a lessening of federal regulations, but that doesn't necessarily mean that local municipalities are going to are going to, follow along. And, let's face it, you mentioned New York, I mentioned New York. New York's a blue town. It's going to stay a blue town. There's no question about it. So, will there be sort of competing forces between the federal government and local governments? Yes, there will be, but this SAFE Act is now passed. It's a done deal. And it's getting enforced. So I don't see that this is going to get rolled back anytime soon. Another regulation that the New York City had put into place, which actually was a positive for the sector a couple of years ago under the de Blasio mayoral administration, was a bill that passed where to construct a new hotel within the 5 boroughs of New York, you need to obtain a special permit. You can't just go apply and build a hotel. You need what's called a special permit. Doesn't matter what district you're in from a zoning perspective. And essentially what that zoning permit dictates is union labor construction and union labor from an operational perspective. Okay. Since this act was enacted, I think it's been 2-3 years now, there's only one hotel that has pulled a permit for new construction. So new hotel construction in New York is going to be muted for many, many years to come. That's good and bad, right? It's good for existing owners, right? Because supply and demand on the one hand. On the other hand, there is concern about, and particularly with this new Safe Hotels Act, hotels, there are many hotels that are claiming 100 to 200 rooms that they just can't afford to follow these rules and are going to have to close, right? So if we see permanent closures, we've already seen a slew of permanent closures post-COVID. We've seen a slew of hotels accommodate migrant housing, right? Many of those properties, when the migrant housing is done, will not reopen as hotels. So here you have New York City with, it's going to end up with shrinking room availability, right? And little new construction. New York could end up being very, very expensive to travel to the point that group meetings and leisure travelers may be like, you know what, we just can't afford to go here. So pluses and minuses to everything in life. Again, a long-winded answer to your question, I hope.
Thank you. That was good. We have a question from Mehmet. Probably the last question you can have.
Sure. Hi, Daniel. Thank you for a very good presentation. As far as I can understand from the presentation, you have a kind of high hopes for the lodging industry. Not maybe in the short term, but middle to long term. My question is now is the new president coming, and as far as I can tell that he's a pro-business and is going to create low interest environment. I don't know if he's going to able to push the Powell, but in the end, and is in the short term at least, he's going to create very good opportunities, right? And at the same time, this could also push more generating more business for the short term because people's gonna feel more wealthy due to stock market's effect right now. But at the same time, this creates an inflationary environment in the middle to long term. So in addition to that, we know that he's approaching to immigration and is going to create much more problems, especially in the hotel industry. Not it can be solved with the technology because of the in-room environment. Plus, we know that during the COVID, the employees were disappointed by the industry, how they reacted, they lost jobs, and there is a distrust towards the industry. So considering with these few things, and in addition to coming the new president at least next 4 to 6 years, do you think that your approach is going to be changed, or how do you feel about it overall?
Well, it's not going to be 4 to 6 years, it's 4 years. Let's make that clear.
Effect might be, that's what I said, 4 to 6 years.
Okay. Listen, I said it before, I'm going to say it again. There are advantages and disadvantages to everything in life. Nothing is perfect. If anything was perfect, then everybody would be doing it and it wouldn't be perfect anymore. You bring up some good points about the, the positives and the negatives. This is a great country, right? It's the greatest country in the world. And you look back I look back at my lifetime. One of my first memories is in 1962, watching black and white television when we had 9 channels, and we really had news then as opposed to opinions, and the Cuban Missile Crisis, right? And after the news at 10 o'clock at night, the TV was done. It was no more TV. And I remember sitting there, hearing about the potential for nuclear war with the Soviet Union because they had planted nuclear weapons in Cuba, 90 miles south of the United States. That happened. That was real. It was frightening, right? Today, you fast forward to today, the world really hasn't changed, right? Today, we're hearing about nuclear activity as well. The problem is that with social media and with 300 channels of television, and you can turn the dial to what you want to hear from right to left or in between, there's nonstop in our face frightening propositions, right? But the fact is, when you look from the Cuban Missile Crisis to today, we've had lots of crises in between, right? I mentioned the great financial crisis, 9/11. Go back to the 1970s during the energy crisis. If anybody remembers, I remember standing on gasoline lines, for hours to fill up my car. We've gotten through all of this, right? And we will continue to get through all of this. Are there going to be bumps along the way? Sure. But generally speaking, I am an optimist at heart. The last thing I'm going to say is that we're in the hospitality industry, and I believe that in order to be hospitable, right, which is that's what we do, right? You have to be an optimist, right? I mean, if you're negative, that's not very hospitable. So another long-winded answer to your question. I hope I answered it, but I will tell you, yes, I'm bullish on life. I'm bullish on the lodging sector. Are there going to be bumps in the road? Of course there will be. But again, this is the greatest country in the world. We're blessed with geography, major oceans east and west of us, friendly countries north and south of us. Compare and contrast that to, Israel and the Middle East, right? We're very fortunate. So I am very optimistic in the long term.
Thank you, Dan. I feel like I got a life lesson more than just a lodging information. We are really grateful that we had you, and it was very interesting to watch your presentation. We really appreciate that. So again, thank you so much.
Thank you. If anybody wants to get in touch, please do, and I'll be sure to get you a PDF of the deck, and you can. Well, it's also on the recording, I guess, but I'll get you a PDF of the deck, and you can circulate it.
We will appreciate that. Thank you, Dan.
Thank you very much, Dan.
Thank you.
Thank you.